So these guys aren't the only ones who are doing this kind of movement within the market. Our Stephanie Link is as well, and has been, and she's told you about it every time she's been on the show, and sometimes when she hasn't, like right now. She joins us to talk about some moves, Steph, that you've made. You bought more Amazon, you bought more Palo Alto, and you bought more Target, which has been really beaten up. But give me the mega cap view first through your Amazon purchase.
Sure. So I trimmed Amazon in early February. Stock is down 19% since then. It's now trading at a pretty interesting valuation, in my mind, 13 times EBITDA versus historical average of 17.5 times. When I sold Amazon, it was at 17 times EBITDA. So it was rich relative to its history. And we know, Scott, that the story on retail, the bigger getting bigger. Amazon, Walmart, Costco, they have 46% market share. Amazon has 28% market share. And Amazon actually grew their market share 410 basis points in the past quarter. So they're humming there. Profitability at AWS is absolutely on the rise. And I think there's still capacity constraints. So I expect second half of the year to see an acceleration in AWS. So I like that one very much. Palo Alto is a fairly new position, Scott. I only started buying it about a month ago. It's down 14%, though, since I bought it. And you know I'm a big believer in cybersecurity, and these guys are a top 5 player in the cybersecurity sector, and they are building out scale through platformization, which could be a $15 billion annualized recurring revenue opportunity for them. So I think the biggest thing is that it's trading at 14 times price to sales, which is not cheap, but CrowdStrike is trading at 22 times. It's recovered all of its valuation discounts post the glitch that they had. So I sold CrowdStrike and bought the Palo Alto.
Yeah, it's the Target one, frankly, that I'd like to hear more about because there are some serious questions, obviously, about where the psyche of the consumer currently is, not to mention a company that's had some issues of late. Why now? Why this?
100%. This is a turnaround story, but I think you're seeing hints of improvement. The stock is down 24% since February. It's trading at 12 times earnings, and they just gave you earnings guidance for this full year, which I thought were actually better than expected, and it yields 4%. This has never been a traffic problem, Scott. Traffic in the past several quarters have been in the 2% level. They just haven't had the right product mix. They had more discretionary versus consumables. But last quarter, you actually saw an improvement in discretionary, and their same-store sales beat expectations, 1.5%. It's a tough environment across the board in retail, but I think they're doing all the right things. The issue with Target is they're going to now need to string along quarters like they just had for the next couple of quarters to get the confidence back from investors, because it's been very inconsistent. But I do think that while it's a show-me story, I do think that they have the right products. Their inventories are under control. They're focused on where they need to be, which is operating margin expansion.
Those are all, additions to positions you already had. You do have a fresh buy that we'll do now rather than wait till the next time you're on. Nextera Energy is a new position. So you've you've been raising cash, you've been putting cash to work, and now you are even lower in cash because this is a new buy in Nextera.
Exactly. So I had 9% cash 2 weeks ago. Now I have 5% cash. I've never owned Nextera because it's always been super expensive. On average, it's traded at 30 times. It's now trading at 18 times, 14 times EBITDA versus 16 times historical. It's down 15% from its high, and this is the highest quality and above average growth in the utility industry. And I really like the fact that they have a joint venture with GE Vernova. I'm familiar with that company. They're going to build out natural gas plants. They're focusing on data center. And the company has a great balance sheet, and they have a $6 billion buyback and a 3% dividend. So I just thought down 15% for number one company in the industry. I started with a small position, and I'll just continue to add, make it bigger.
All right. Good stuff. Steph, thanks for joining us, taking us through these.
Thanks,
we
Scott.
appreciate that. We'll see you soon.